So markets were on track to beat some records today, but that got deterred this afternoon by Donald Trump saying the talks with Canada for trade are over, terminated. The TSX has dropped 93 points right now. Not a lot of movement on the S&P 500. It's up 19, and the NASDAQ is up 57. Let's welcome Kai Lam, Chief Investment Officer at JCIC, to talk some more about what's been going on. Thanks for coming in.
Thank you.
All right. So first we had Donald Trump late this afternoon say, yep, the trade talks are over. He doesn't like the digital services tax Canada has implemented, which takes effect June 30th. Are we in for another sort of bumpy road ahead with Donald Trump putting out these comments on social media?
Look, I think in any given day, it's been a challenge to predict what Trump says or does, and certainly that's not really a way to invest on the day-to-day fluctuations of that. So far, we've seen the market has been resilient. Like even though there might be some knee-jerk reactions, ultimately the fundamentals is what matter the most.
I feel like things have come back. We saw the TSX hit a record high yesterday. It's been hitting highs quite a bit lately. The NASDAQ 100 broke through a record. So it felt like things were steadying out and enthusiasm was back. Yeah. But I'm wondering whether you think something like this is going to suck that air right out.
Look, I mean, I think the markets have had a big run, and you might see, a little bit of a breather now, depending on what he says. But ultimately, I think the markets were really resilient because the economic data has not been as bad as feared, and then the inflation hasn't really come through from the tariffs at this point. And the companies have been mostly delivering on their expectations. And so I think that has been supportive.
Okay, let's talk a little bit about sectors that you like right now. And whether this announcement today changes what you've been looking at. What are you liking?
So I actually cover both international and Canadian equities. Within Canada, we have been sensitive to all the tariffs and the uncertainty there. So for the last few quarters, we have been kind of minimizing that exposure. So we haven't had...
To North America or just Canada?
Well, both, but I mean, the greater sensitivity is in North America. And so, for example, we don't have any auto exposure, and we don't have much of exposure when it comes to commodity exporters. And really, when it comes to Canada, we've been very specific on specific names that we like, where visibility is good. And then, when we look internationally in Europe, once we get out of North America and China, the sensitivity of the tariffs actually come down. And so we see opportunities there. Like in Europe, our favorite area has been in European defense.
Got it. Okay. European defense, of course, with Germany leading that charge there, and NATO allies saying they are going to spend more on defense, or at least that's what they plan to do. You like defense? Is there anything else you like in Europe, or that is where you're focused on?
So also in Europe, aside from defense, again, we've been focused on visibility. And so some of our other stock performing areas that's done well has actually been in telecom and utilities. They're regulated and really more visible businesses. That's what we've been focused on. Also within Europe, it trades at a 30% plus discount to the US. And so we've seen opportunities there just from a valuation differential.
Okay, let's talk about North America. You mentioned what you are staying away from. What are you staying in?
Yeah, so when it comes to Canada, when we're looking at some of the top performing things we have, for example, like Agnico Eagle is our gold position, and that's done really well. Cameco is also, the largest uranium play in the world, and we think that'll do well. And then Dollarama has also been a strong performer. But if you look at it, they're all very kind of specific niche names, specific to Canada versus, I guess the more diversified market you see outside of Canada.
Are you moving towards any of the retailers like the Walmarts, or you mentioned Dollarama, but retailers where people get more bang for their buck, which seem to be doing really well, and with North Americans worried about the economy, they seem to be buying more at these stores? Yeah,
we do like the fact that it's a resilient business where, if there's a recession, people will trade down. But in this case, they're still also a grower, right, where they're able to still add several hundred new stores over the next several years. And so it has that both growth and defense.
How long do you think you'll keep this strategy? And I know it's only been about 6 months that Donald Trump's been in office. So I'm wondering when you started to pivot and how long you expect this pivot to last.
So we keep on monitoring how much stocks are discounting. And so there were periods where after Liberation Day and the the stock market really pulled back, we did see some companies really dislocate from their fundamentals, worried about the trade the tariffs. And so when valuation does come in and the fundamentals are still good, we'll buy. So it really depends on kind of buy points of different stocks that we monitor.
Let me also ask you about tech, because I just want to know if you're interested in tech, if you're putting money into tech. They have bounced back quite a bit since April, some of them more so than others. NVIDIA is one that has pushed through already its highest share price. Are you staying away from tech at this point?
No, we still like tech, and ultimately, as long as they deliver on their earnings and have that visibility, then we'll continue to hold it. I think that there was probably too much of a knee-jerk reaction and concerns over DeepSeek and whether the AI trade is over, and we really don't think so. So we think there'll be more to come.